Dear students, I welcome you on behalf of Thakur Vidya Mandir High School and Junior College for the remote teaching learning process, where our motto is let learning be a joy and teaching a pleasure. Let us begin with part 5 of chapter 2, Sources of Corporate Finance, wherein today we are going to understand the meaning and determinants of retained earnings. Let us begin with the first question, which is what is retained earnings, and explain the determinants of retained earnings. Before we move towards the determinants, firstly we need to understand the meaning of retained earnings. What do you understand by retained earnings? The profit which is earned by a joint stock company, the entire profit is not distributed among the shareholders in the form of dividend. A part of net profit which is not distributed and kept aside or retained by the company in the form of reserve fund, that is called as retained earnings. So retained earnings basically means the part of net profit which is not distributed to the shareholders in the form of dividend and which is kept aside by the company in the form of reserve fund, so that it can use that amount later on in future. How does the company make use of this fund? The company later on uses this fund to carry out growth and expansion activities, and in such case it does not have to go out and borrow the money because it has already saved certain amount of money in the form of reserve fund. Thus, it can be said that retained earnings refers to the process of accumulating corporate profits and then later on utilizing the same amount in business for expansion activities, for growth activities, etc. Further, the company can also convert this reserves into bonus share capital, and thereby it can capitalize its profits. So whenever the company issues bonus shares, in that case this amount of retained earnings is capitalized. That is, the retained earnings or the retained profits only get converted into bonus share capital. Thus, capitalization of profit by issue of bonus shares is also known as plowing back of profit or self-financing. Retained earnings is considered to be the most simple, cheapest, and an important source of internal finance. So retained earnings plays a very important role not only in the growth and expansion activities of a business organization, but it also equally helps in converting the reserves into bonus shares. Let us now understand the determinants of retained earnings. The term determinants means the factors which determine the amount of retained earnings in a joint stock company. There are several factors which determine as to whether the retained earnings would be greater or it would be a lesser amount. The first determinant of factor is total earnings of a company. The amount of retained earnings depends on the earnings or profits of the company. If a company earns more profit, sufficient profit, ample profit, in that case it can save and retain some parts of profit. So it can be concluded that more earnings means more savings. It is rightly said that higher the earnings, higher will be the savings, and lesser the earning, lesser will be the amount of retained earnings. Let us now move towards the second point, which is taxation policy. The amount of retained earnings in a joint stock company also depends on the taxation policy which is adopted by the government. If the government charges more taxes, then the companies cannot save much. And in that case, it would be having a lesser amount of savings, that is lesser amount of retained profits. But on the other hand, if the government charges or levies taxes at a lesser rate, in that case it can save more and thereby the retained earnings would definitely increase. Let us now move towards the third point, which is dividend policy. Dividend policy refers to that policy which is adopted by the board of directors for distribution of profits among its shareholders. There are several dividend policies which could be adopted by the board of directors. Let us assume if the board of directors adopt conservative dividend policy, which means that it pays less to the shareholders in the form of dividend and saves more in the form of reserves, then the retained earnings of such company will be more. On the other hand, if the company adopts a liberal dividend policy, that is, it pays more amount of dividend to its shareholders and keeps its shareholders happy, in that case it saves less in the form of reserves, then automatically the retained earnings of such company will be less. Let us now move towards the last and the fourth determinant of retained earnings, which is government control. Government is that regulatory body of the economic system of the country which decides the rules and regulations relating to the functioning of joint stock company. The dividend policy not only depends upon the management or the board directors, but this board of directors have to frame the dividend policy according to the rules and the regulations framed by the government. So government keeps a complete control on the working or the functioning of the joint stock company, and that is why the amount of the retained earnings also depends upon the government policies, rules and regulations. So with this, dear students, we have completed 4 determinants of retained earnings, which are total earnings of company, taxation policy, dividend policy and government control. I thank you all for your patience listening.